Now, here on the show, here on America's Retirement Headquarters, we talk so often about seeing opportunities in times of, financial uncertainty and even when things are going well. Here we are at the end of the year, and let's talk about this. Say somebody has a traditional IRA funded with pre-tax dollars, and they're looking at converting it to an after-tax Roth IRA. Is right now, here in October, a good time to do so? What kind of factors do you consider before recommending a Roth conversion to people?
I think it's a great time really to take a look at a Roth. I think every year people should be looking at Roths. But, when we look at it and we're thinking about the millionaire mindset, keeping the government away from your money is one of the best things that a family can do. And, if you look at the out-of-control spending that's going on right now and look at the out-of-control spending that's going on, if we look at the U.S. debt clock, our national debt is quickly approaching $32 trillion. And if we take a look at that, how is the government going to raise money ultimately to pay for that? It is really going to come in the form of taxes. So if you took that national debt and you can divide that number between every man, woman, and child, that's $92,831 as we're doing today's show for every man, woman, and child to pay off our U.S. national debt. Now, Jeremy, as you know, children don't traditionally have to pay taxes, right? So not everybody who's an adult actually pays taxes. And so if you looked at it and we just split up that debt between taxpayers, that bill is now $245,822. So looking at it, that's a substantial debt for the U.S. taxpayers just to uncover that. Now, in addition to that, we have all of these unfunded liabilities. So if you've been listening to the show, you know the fact that Social Security's gone broke, Medicare's gone broke. You've got the prescription drug program. You've got one after another of financial problems that are happening. They asked this famous bank robber, Willie Sutton, why they robbed banks. Jeremy, do you remember why?
That's where the money is.
That's where the money is. And so if we think about it, a traditional retirement account is usually the biggest or second biggest asset that somebody owns. That's where the money is at, folks. The conventional wisdom that the government or other people have taught you for the past lifetime is to save and invest in a tax-deferred investment vehicle, because when you get to retirement time, your taxes will be lower. Look, we've both done this for over 25 years, and for somebody who works with folks every single day that are transitioning into retirement time, our clients who are successful investors are not sitting on the porch watching life go by. They're getting in their car, they're going to see their grandkids, they're taking them to different events, they're doing that river cruise that they've always wanted to do. They're out there enjoying life. And if you've been a successful saver and you're looking forward to the days where you want to enjoy your life, again, a Roth conversion can be one of the best things to take a look at for some of your long-term money. Again, it can be a way to help keep the government away from your money. Now, Jeremy, when we look at it, again, a Roth is not one of those, it's right for everybody in everybody's situation. But if we look at it, a pre-tax traditional IRA, what that says is that you're going to save some money on taxes when you make the contributions based upon, your income and tax brackets. In turn, that money grows tax deferred, and then you pay money in taxes when you take the money out. And right now, at the age of 72, they have something called a required minimum distribution where they force you to start taking taxes out. A lot of people, don't pay until they get to 72, and they look at, just required minimum distributions. To me, it's like going home and seeing a little bit of a leak underneath my sink and a little bit of water's coming out. And I just look underneath the sink, I see a little bit of a leak, and I just close the kitchen doors, and I hope that problem goes away. Well, we know that that problem doesn't go away. The problem gets worse. But when we're looking at some of the reasons why it doesn't make sense, Jeremy, do you have any examples of thoughts on, maybe why a Roth is not the right approach?
I think there's a couple factors. I would take a look at healthcare costs. Surprisingly enough, healthcare costs has nothing to do with your health. It has everything to do with your income. So when you do a Roth conversion, that money you convert does count as income. So it's going to go on your tax return as reportable income. So if you're kind of looking to save a little bit of money on healthcare, it would not make sense to do a Roth conversion. The other area would be if you're in a high income tax bracket now, because yes, you're deferring taxes. However, like I mentioned, if you take the money out, you're going to be taxed as income right now. So if you're in the, say, 25% tax bracket, it might not make sense to convert a substantial amount of money and pay that higher tax bracket if it bumps you up into, say, the 30% bracket. So those are a couple of things that you should be aware of before you make before you do a Roth conversion, and take a look at how much really makes sense.
I think you bring up a good point. Coming in today, instead of Scott Kirshner talking Medicare, you bring up a great point. Whether it's affordable health care or Medicare, the conversions that you do on a traditional retirement account are going to be counted against what your healthcare cost is. So it's absolutely one of those areas that you don't want to get a big surprise from, because when you go file your tax returns the next year, it can be a big surprise. Now, in addition to that, before you make any financial decision, I'd always encourage you to sit down and run the numbers with your CPA or accountant. I know, work with a lot of CPAs and accountants, and getting everybody all on the same side of the table together to figure out what makes the best decision, when you have multiple people and professionals looking at it. But by no means are we a tax professional, so always seek advice from your CPA. The next thing I'd say is time frames, right? So the longer term that you have the Roth money set aside, the more power of tax-free growth gives it the best bang for its buck. So for some of your longer term holdings, that can make sense. One of the next things that you brought up, Jeremy, is you talked about taxes and where you're at in your tax bracket. It's been my experience that, many folks, what they do is they do tax filing, meaning that once a year they get together with their tax professional, they sit down during the busy season, they turn in all of the paperwork, they file the tax returns. Very few people actually take, like now being the end of the year, to look at how does this year look and what can I do this year to try to minimize the taxes for next year, this year, and in the future. Our tax savers checklist is one of the areas that we walk people through when we're looking at tax savings ideas. And a Roth conversion is an area to take a look at. As you point out, as you bump into the next bracket, it may not make sense. I had a client, she was recently in, and Donna came in to talk about a Roth conversion because we've been talking about it here on the radio for a while. What we did is we got her accountant on the phone. We looked at her last year's tax return. We looked at where her expected income is going to be this year. And what we found there was about a $15,000 window that would allow her to stay in her same tax bracket, yet convert some of the money over into the Roth IRA and pay the taxes now. So in that scenario, by looking at it from a tax perspective, it allows us to systematically shift it over. We have the software here where we can work with your CPA, we can work with your accountant. Maybe you're a TurboTax do-it-yourself. We're happy to talk to you. If we need to pull in somebody, we can help recommend a CPA or accountant. But getting a tax roadmap is one of those things that it is, the 12/31 is the deadline. So it's an area that is coming up on the list that you need to check off before the end of the year gets here. And then the final thing I think about is when you're looking at doing a Roth conversion, it's which investments to convert. Any thoughts that you have on that, Jeremy?
I think, yeah, it's another opportunity to where you can convert specific assets. In other words, if I own Apple stock in my traditional IRA, and Apple stock is down, let's just say 20% this year, I can convert that into my Roth IRA, and then when, I didn't say if, I said when Apple comes back, I can get that growth in my Roth IRA and defer taxes and essentially never pay taxes on it again. So you take a look at those different opportunities where there might be some depressed holdings that you have that you can convert over. The other thing I'll mention too, I just met with my godmother who happens to be a CPA, and nothing against her. I love her. She's my godmother, but most CPAs are looking in other words, they're trying to save you money today. Let's pay the least amount of taxes today. Where we look at through proper planning, taking a look at that strategy to not only look at today, but also tomorrow and in the future. So having that tax roadmap done and that strategy to convert some of those monies will save you a lot more money in the long run.
Yeah, so again, when you're looking at it, we're not saying that one particular stock is the best one or not. Again, you want to look at your own personal situation. But, what has happened is this year the market has really beaten up a lot of stocks. So there's a lot of good opportunities when you look at it of companies that their price is substantially lower. If the stock price is down like the market 20, 30, 40% this year, and you have a lot of belief in that company is going to be here for the long run, the question becomes, does it make sense? Would you rather pay taxes now while the price is down 20, 30, 40%, knowing that if and when it comes back, if you follow the rules of how a Roth IRA are set up with, being over 59 and a half, having it open for more than 5 years before you access the profit, if you believe in the long term of those stocks, why would you not want to pay taxes right now with some of that money, with some of your favorites that have long-term growth potential in moving it over to a Roth IRA? It's an absolute great idea, and it's an idea that if you haven't taken a look at, we'd love to sit and have a conversation with you. When we look at your holdings, we can tell you some of the ones that are our favorites. We can look at yours and tell you which ones we think could be a good option for you. But make sure, again, the deadline's coming up, and as you know, time flies fast. So we'd love to sit down and get a tax roadmap for you and put the analysis together.
Again, especially as we come up on the end of the year, the hustle and the bustle of the holidays, things may get lost in the shuffle. It's a good time as we approach the end of the year where you already have a pretty decent idea of what your income is going to look like for the rest of the year to maybe do these Roth conversions without pushing yourself into a higher income bracket, and then end up having to pay more in taxes. That would be a cutting off your nose to spite your face situation. You want to avoid that. And again, to see what's going to be right for you, if it's going to be right for you, both Nolan and Jeremy pointed out there are situations there where doing a Roth conversion may not be the right move, but to see what could work for you and make sure you get to keep as much of your money as possible when it comes to taxes. Give a call, schedule a time to speak with the team at America's Retirement Headquarters, 419-794-3030, 419-794-3030, or go online to the website, americasretirementheadquarters.com. As always, really do appreciate you spending part of your day with us here on America's Retirement Headquarters. Please take care of one another out there. Have a great week. And as we wrap up, gentlemen, I want to leave you with the final word.
Yeah, great quote for the week. It's retirement is wonderful. It's doing nothing without worrying about getting caught at it. So enjoy your week, everybody. Have a great weekend, and we'll be back right here on Toledo's largest talk station, 1370 WSPD. We're home of the Retirement Guys Formula and America's Medicare Associates.